Welcome back to the Eric Krown Crypto channel. Wishing you a happy and start to this nice macro Sunday morning over here, of which we are going to be addressing a statistical analysis of when the low is most likely to be in from a time perspective, and also perhaps a price perspective as well. As always, when we talk about these ideas that are very far away, I'm mostly just using the weekends to talk about these things because there's not too much interesting price action in the short-term timeframes, which is what I think is actually the most compelling. But I do think that there's a few interesting things over here today to be looking at, and a bit of even hopium, well, not necessarily for the short term, but perhaps for the long term. So without further ado, let's just jump into it. But actually, before we jump into it, I did want to address that the poll here, if you're unawares, on the Krown trading application is very interesting because 54% of you did say that this weekly was going to close red, and so far, so good. Looking like the community is actually having a pretty strong hit rate, in fact, as I do kind of back test all of these metrics since we started recording them, and we'll actually be having a leaderboard for that soon enough. Anyways, without further ado, let's just jump into it right now. I wanted to start off with the first and most important chart for this analysis, and that is the monthly accumulation distribution chart. Always like to tune into this chart, especially when we get a new month, of which we had one more recently, and keep a sombering perspective as to what we're looking at over the long term here. So what essentially am I looking at? Well, I'm looking at this indicator right here. This is the accumulation distribution indicator. What you need to know about it is that for the lows on Bitcoin, for all macro lows on Bitcoin, we have never, ever seen a macro low on Bitcoin without the accumulation distribution indicator getting down to where my cursor currently is at right now, that horizontal green line. You can see that that has aligned with the last 1, 2, 3 lows, and going back to 2012 over here as well. A little bit less well tested, but still did kind of get that momentous move to the upside, obviously. So within the context of this, especially the last three, we can see that it does correlate extremely well with pretty much around the lows, not necessarily the exact low. Over here in 2018, we did see price action trade. Actually, it did get the low. But on a closing basis, Bitcoin did close a little bit lower in January in relationship to December. But on a wick basis, yes, it didn't even get that. So overall, that does keep me still on the defensive as far as this goes, saying that likely at earliest, like all hopium to the maximum, like all hopium turned up to fucking 69 out of 10, that even makes sense, would be a low in September. Now, keep in mind that even if Bitcoin were to have a low there, which I'm not saying that it is, but if it were to, that doesn't necessarily mean that it just goes, straight fucking moon mode, green dildos to the heavens right after that. No, what's very likely to happen is you spend a lot of time going sideways, boring the ever-loving shit out of people, similar to how you did over here in 2018, 2014, and 2012. As you can see, these spent, like half a year accumulating after those major lows were hit. Think about it this way, like if you were to drop a rock into the ocean, it just because it hits the bottom doesn't mean it's going to bounce, right? It's probably going to spend some time down around there, and then maybe someone scoops it up like the good old ring, from Lord of the Rings, because it might be valuable. But in this case right here, again, the area between the current reads of the accumulation distribution indicator and that actual historical low side region would imply at least one more month, and perhaps even a little bit more than that as well. Anyways, I also wanted to bring into the conversation the average corrections that we have seen from this indicator from when it turns red. So in this case, it turns red in January 2020, where my cursor currently is right here, to that actual low, and then measure out those corrections from a historical perspective, and also looking at the days as well, which I did think that was interesting, but actually didn't prepare that just yet for this chart, which I will do for next time. But in this case, have found that there has been an average correction of about 61.34%. To put this into context, we have thus far seen from the time when that turned red, which was over here in May, to the current low, we've seen about 58.5% to the downside. Now, is that in accord with prior lows? Well, actually, yes, that is even a little bit more than what we saw in 2018, coming off of this major massive dump bull party from Signal started in September and ended in November, or realistically December, actually. So is it in alignment with that? Yeah, I would say so. But if you are looking at this from a perspective of average corrections, it is a little bit more, which while there isn't a humongous differential percentage-wise between where Bitcoin is right now and the average correction, it would actually account for a low somewhere closer to $15,500 bucks. Again, keep in mind that there is variance with these reads, but ultimately, would say that if Bitcoin is going to have a leg lower, perhaps somewhere right around there would be worthwhile to be looking at. What I also wanted to get into is this chart over here, of which we're going to go to the bi-monthly chart right here. And the bi-monthly chart, you will also notice that that green moving average, which is a 55 exponential moving average, is actually hovering right around 15,500. And also if I were to put on, which I actually haven't done this just yet, but if I were to put on a nice Fibonacci retracement, from the high to the low of the last cycle to this cycle, you'll notice that the 0.5 is, if I actually do it fucking properly, which would be great. Okay, the low was not there. It was like right here, right there. Then you can see that the 0.5 is right around that $15,000 number as well. So good confluences there if you happen to give a fuck. Other than that, I wanted to call out this as well. Okay, so just looking not at the accumulation distribution indicator, but just at the average corrections for Bitcoin over its full history here, which by the way, there's one over here. It's not shown on this chart because it's Bitstamp, but I didn't want to use this on the index chart. So I measured it out over here. And then I basically just put the data over here, just so you know, full disclosure right there. Did find that when I measure for closure on the macro high to the next macro low, so cycle high to cycle low, the average correction was about 79, sorry, yes, it was 79.85%. However, and that's not including the Rona dump, by the way. I did omit that one for this particular calculation. If I do include it, then it's more like 77.85% from the high to the low. But I did not use that on a closing basis for the Rona dump. I used that on a wick basis because that actually really fit well within the data. It was a 71.82 correction, and all of the other ones are kind of within that ballpark. Well, a little bit on the upper end, to be fair. You have kind of seen them trend down over time, for what it's worth. Anyways, the average days taken from the closing monthly high to the next closing monthly low, as far as the macro high and macro low go, was on average 312 and a quarter, actually, so a quarter of a day. Anyways, the reason why I bring this up right now is because one, we have thus far seen from high to low about a 71% correction. Correction, fucking crash is the proper terminology. And thus far, it has been about, well, I guess we're on this month over here. At the end of August, it'll be 304 days. So between August and September, we will have hit the average amount of days on that correction, a little bit above it at 335. Yes, we have seen some variance in this as well, as high as 426 days. And as low as 274 days, by the way. And in this case right here, that would kind of put us, a little bit in the middle of that. So again, from a timing perspective, perhaps getting closer. Again, if that were to happen in alignment with the accumulation distribution indicator hitting this region or around this region, like reasonably close to it, that would be a good indication that, Bitcoin is in the process of finding a macro low. And then on top of that, if I want to bring up the biggest hoping that I can bring up within the context of this conversation would be this, the quarterly chart. So the quarterly chart on Bitcoin, realistically does not have that much history. So I do want to address a takeaway from this because that is quite literally true. And then what is interesting, if you do put weight on this, is that the quarterly RSI here has been, let me actually get rid of this for right now, has been, interestingly enough, good at getting the last few pair of lows. The problem is, again, 2 times does not make a trend, but trends obviously have to form over time. And in this case, we do see that hidden bullish divergence did mark off the macro low that we did see in the 2018 saga over here. Again, keep in mind that quarterly obviously encompasses 3 months. So, there's gonna be some like lost time in there. But as you can see, if we were going to draw a trend line from this low in 2015 to this low in 2018 to our current region, or just draw a trend line from there, well, what do you know? We're actually hitting that trend line exactly right now. And if Bitcoin were to put in reversal here, again, this does not imply that the actual low is in, but like around here, then that would imply hidden bullish divergence. And if we have hidden bullish divergence on a quarterly chart, a rather powerful time frame, at the very least, I'd be looking for a significant upside coming into like the back end of this year. And when does this chart close is the real question. Well, this closes at the end of September, and the last day of September into the first day of October, basically, is what I'm trying to say. So again, does it align with the timing narrative that we kind of outlined over here, as far as this indicator very likely gets close to that region around that time frame, September, October? Yeah, it does. As far as the timing that we spoke about on this chart over here from the average macro corrections, 312 days, yeah, actually it would. It'd be a little bit on the upper end of that schedule. And then over here, yes, that would also kind of, be around that time frame as well. And then you got the whole Fed pivot talking as well, which that actually doesn't really sound like it's probably going to happen, especially with the last jobs report that we just had on Friday. But I'm no macro economist, nor do I really want to be one. But fair enough. Fair enough. Anyways. Cool. So I think that's all I wanted to speak about on the macro. Everything else would just be a rehash of prior ideas already spoken about. I did want to follow up very quickly on, did I want to follow up on anything else very quickly? No, I think yesterday's video will stand for itself. If you're interested in the next sort of week of price action, check out yesterday's video. It's still very much relevant. I think we'll end this one right here. I hope that this was in some way helpful. Take care, much love, and see you hopefully soon.